Peter Lynch said, a stock decline is routine. A decline is a great opportunity to pick up bargains left behind by investors who are fleeing the storm in panic. And Warren Buffett also said, unless you can watch a stock decline by 50% without becoming panic-stricken, then you should not be in the stock market. The stock market is a device for transferring wealth from the impatient to the patient. And with all that said, guys, we're taking a look at the Boohoo stocks, and I'm here to answer all the questions I've received in my DMs. What's going on, guys? My name's Emmanuel and welcome to my channel. And guys, if you haven't already seen it, I did an in-depth analysis on the company Boohoo, and in that analysis I broke down what really happened with the modern day slavery scandal, and I gave my thoughts and my opinions regarding how I think this would affect Boohoo in the long term. And if you haven't seen it, then click the suggested tab that's up there right now and give it a watch. And then I would advise you to return to this video. At the time of recording last week's Boohoo video, the market price was trading at around £2.80, about £2.80 a share, and it has since dropped this week, and it's now currently trading, I believe, at £2.20 a share. And of course, I've had subs and friends asking me all types of questions regarding the stock recently, and you know what, I thought I would share my answers with everyone. Alright guys, so here are the most common questions that I received. The first question is, why is the share price still falling? Now guys, a share price falls when you have more sellers than you do buyers. And with that said, I believe there are actually two answers to that question. Firstly, Boohoo has still got negative media attention right now. And there's no doubting that it's still in the spotlight, it's still making all types of negative headlines, and is ultimately still being held responsible regardless of the fact that it's recently emerged that it's Boohoo's supplier. Not Boohoo, it's its supplier that's been paying its workers below the minimum wage. But despite that, last week Friday, or I believe earlier this week, Standard Life Aberdeen, the third largest shareholder of Boohoo, they dumped most of its shares due to what they refer to as inadequate action towards the recent allegation from Boohoo. So Boohoo's third largest shareholders dumped most of its shares. And think about it, guys, we're talking millions and millions of shares. And that would absolutely drive the market price lower, okay? So secondly, you as a shareholder, all you're seeing is constant bad press. And now you've seen reports that Boohoo's largest shareholder has dumped millions of their shares. Naturally, you're going to become nervous. You're going to forget your initial fundamental reason for investing in Boohoo in the first place. You might also hate the fact that Boohoo is caught up in all of this mess. You forget the fact that they have solid financials, and then you start to sell your shares. And when other shareholders start to notice that other shareholders are also selling their shares, and they are also aware of the bad press, then it's natural for them to also become fearful, and also they will start selling their shares. And now you have a mass selling frenzy of Boohoo stocks. These two factors alone is enough to cause the share price of the company to continue to fall throughout this week. Now, the best investor of all time, Warren Buffett, advised that you should be fearful when others are greedy, and you should be greedy when others are fearful. So my understanding of that quote is this: you have to ignore all of the hype, all of the panic, all of the fear surrounding the company, and look at the business itself. If the company is still growing its revenues, it's still growing its earnings, it still maintains a strong balance sheet, and also has positive free cash flow, and there is no significant long-term change to the fundamentals of the company, and your thesis for investing in the company in the first place is still in play, then you have found yourself an incredible opportunity to invest in a company that is heavily discounted. And thus, you should be greedy and buy as many shares as possible while fear continues to hammer the price lower. It's like if you went to the car dealers and they had a nice Mercedes E-Class coupe you know, in jet black, glistening, and it's available for sale, and it's 50% off, I won't lie, I would want to see the service history. I would want to make sure the car's MOT is in check and make sure nothing is wrong with the car. And once I've done all of my checks and there's nothing wrong with the car, then I'm not gonna lie, I'm biting the dealer's hands off. I am taking that car right now. And Peter Lynch also says, in the long term, price always follows the earnings. So in my opinion, as long as Boohoo continues to increase its earnings in the long term, it continues to increase its revenue, eventually price will also increase. And if you strongly believe that Boohoo could not continue to grow its earnings in the long term, and you don't think Boohoo can maintain its strong balance sheet, and you also think that Boohoo will most likely go bankrupt, then save yourself the agony and reconsider your position. The key term here, guys, is long term. Alright guys, and that leads me into the next question that I've received. And the question is, what have I been doing with my position? Well, I've been dollar cost averaging my position lower by buying up more shares of Boohoo at a much cheaper price than I initially paid for it. I initially bought in around £2.75 a share, and I bought more at £2.50 a share, and I bought even more at £2.10 a share. And now my average cost position is about £2.50. So my plan now is to hold because I don't have to sell it. But if it does dip below £2 and there's been no drastic change to the financials or to the fundamentals of the company, then I will buy more shares, and then that would be my entire budget that I initially set aside to invest in Boohoo, and I will hold for the long term. So that's what I've been currently doing with my position, guys. Make sure you have a budget and slowly phase it in. Next question is, why would you invest in a company that pays its workers £3.50? It is unethical. And you know what? I completely understand this question, but as I clearly stated in my first video, it wasn't Boohoo that was paying their staff £3.50. It was Boohoo's supplier that was paying their staff modern day slavery wages. Now, you could argue that Boohoo were aware of what was going on, but to be fair, you have no proof of that. And therefore, you could also argue that maybe they weren't aware, alright? Also, comment in the section below if you know of a single blue chip company that is 100% squeaky clean and has zero flaws, and you know it has no faults and has never treated a single member of staff unfairly. I don't believe that type of blue chip company actually exists. So I understand your concern and also understand your question, but I don't really think it has any merit in this debate. But that's just my thought. So the next question is, what makes you so confident about the stock? I did my research on the stock and I understand the fundamentals, and I do like the current financial position of Boohoo. I also like the fact that they are an online fashion retailer, and with the death of the high street clothing outlets, you know, you've got your Ted Bakers which are struggling right now, everyone is moving to shopping online at a much faster rate, and it's with the help of the Roni Rona, and Boohoo are already positioned and also already dominate the fast fashion online space, okay? That's also evidence in Boohoo's recent growth rate over the years, and everyone else is simply just playing catch up. Also, the CEO and CFO recently purchased £15 million worth of Boohoo shares just this week. Now, do you think if the sales were slowing down and the earnings were dropping, that they would plow £15 million of their own money into the stock? I strongly doubt it. But you could also argue that it was a move to try and raise investor confidence. And I ain't gonna lie, guys, I'm gonna be honest. It worked on me. It gave me a whole ton of confidence this week with my investment that I even added more shares to my investment. But also, guys, that's just me, all right? So that wraps up today's video, guys, and I hope I've answered your questions and also kind of eased a little bit of nerves. Ultimately, guys, investing is a personal decision that you have to make. And you shouldn't be investing with money that you need in the immediate future, all right? As always, guys, make sure you do your own due diligence and your own analysis before you decide to invest in any company or in any stock, okay? Don't invest in any of these companies simply because I say so or because I've invested. I'm not a financial advisor. Invest in your own investing knowledge and purchase One Upon Wall Street by Peter Lynch. Excellent book. The link is in the description below. I always recommend this book because it really helps me and giving me confidence, especially in times like this. And if you do want to start investing, I would highly recommend my trading broker, which is Trading 212. Click the link in the description below and Trading 212 will give you a free share and will give me a free share. With all that said, guys, don't forget to smash the like button if you enjoyed today's content. Hit the subscribe button and the notification bell if you want more content from myself. Got a ton loads more value coming up, guys. Thank you for watching and I'll catch you in my next video. Peace.